Hello, bringing you a review of the German DAX from an intermarket analysis perspective. My name is Adil, and let's have a look what's happening here then. Okay, so with regards to German DAX fundamentals, there seems to be the meeting in Minsk tomorrow with regards to Miss Merkel, Putin, and Mr. Poroshenko. Obviously, hopes of a de-escalation. Obviously, that's one of the reasons why the markets are up. Obviously, the second real catalyst for the markets to be rallying is obviously expectations of QE from Mr. Draghi. Okay, so shares rally. And this article here sums it up. Shares rally and ECB stimulus bet. Okay, so obviously interpretation post Jackson Hole, Mr. Draghi, and obviously Mr. Kuroda stating that Mr. Draghi will do all he can to fight obviously deflation. So obviously that's helping the European equity market higher. Having said that, though, there's been two negative news flows thereafter. Even though we've had U.S. markets obviously short squeezing to new highs. I mean, you call it short squeeze, call it buying. From my perspective, I prefer to call it short squeeze because I can't still see any real reason for the market to rally. But that's the case. So that's the situation that we find ourselves in now. Obviously, the situation with regards to the de-escalation regarding Ukraine and Russia obviously took a turn because we had Mr. Lavrov, I think his name is, the Russian foreign minister or the defense minister, say that they were going to send another Russian aid convoy. Okay, so obviously that's going to spice things up a bit. Okay, and also he stated, obviously that's prior to the talks going into tomorrow, so a lot of people don't have high hopes regarding the talks tomorrow. So obviously that's certainly turned sentiment there. Okay, and also there was certainly more troops amassing on the border. Phone call with EU officials. Poroshenko expressed extreme concern over another Russian convoy entering Ukraine. So obviously that's certainly not bullish. Then you had the negative news flow out of France. His approval rating falls to a record low of 17. His government has been potentially replaced or eradicated, shall we say. So there's some sort of political uncertainty there. Okay, so that's obviously negative. Then on top of that, I mean, this article here sort of summarizes everything from the bearish standpoint. German data was weak, as we already know, with regards to the IFO data, and also the French government implodes on Eurozone policy split. Okay, so there's an argument there regarding pro-austerity or pro-growth. Meanwhile, we're digesting European Central Bank, blah, 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 who condemned fiscal austerity and Germany's obsession with budgetary rigor, triggering Monday's government resignation. So that certainly is not good signs with regards to Eurozone, as they're already suffering with regards to the Russia-Ukraine situation. And if they're split, then that doesn't certainly bode well. The Munich-based IFO think that echoed some of those sentiments. A reported business climate index based on monthly blah, 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 fell to 106.3 from 108. So that certainly isn't good. And also I think there was Mr. Warble, who forecast 0% growth for Germany. So that again isn't good. Even though Merkel did try to put a spin on things and said that going forward, obviously everything would be restored to normality. So that was the negative effect as well from that perspective. So weak German growth, okay, and obviously the Ukraine situation taking a turn. Now the markets ignored everything, okay. Obviously that must have bought a lot of shorts into the German DAX or forced shorts to cover their positions because of Mr. Draghi's stance on QE and obviously fears of the market going higher on QE. Given the fact that the Nasdaq obviously is making new highs, whereas the DAX, given the fact that the relationship is strong with the Nasdaq, is not in line with the Nasdaq. So that's something very worth thinking over, folks. Okay, so now, where do we stand? So we have the talk with the meeting tomorrow, which a lot of people are expecting nothing much to come from. Okay, no real resolution there. With regards to Ukraine, Russia, especially given the fact that they've sent another aid convoy in, they've got no intentions for some sort of peaceful resolution. So that's number one. Number two, the fact that we had weaker data out of Germany, that certainly doesn't bode well, and obviously the French government, obviously, given the fact that it's the second largest economy in Europe, certainly doesn't bode well going forward, and obviously the split regarding austerity and versus pro-growth policies, that doesn't bode well either. Now, The US market certainly are not bullish, okay, and I'll certainly try and cover that in a second. But for now, upper channel resistance and 200 MA resistance, obviously in the 61 to 75% fib retracement zone, certainly doesn't bode well. 60-minute chart, as you can see, certainly have got liftoff, but we do have previous support equals resistance around that region here. Okay, so no real reason on a 60-minute chart why we will reverse. 10-minute chart again, certainly very impressive move. Has to be respected for now. Has negated that trend line at 9,500, and I remain short the German DAX, looking for a potential move lower, and that's mainly based on this 200 MA resistance. So the German DAX generally is dictated by the Nasdaq. The Nasdaq itself has obviously failed to hold the gap, so that's bearish for the DAX. Okay, biotech is into resistance. Semiconductors have failed to hold the gap, has closed the gap and actually propelled lower, and is approaching the 200 MA, given the fact that it's got the H&S formation that's in play. Okay, so that's basically a summation there, folks. So risk on, risk off, wax on, wax off. Goodbye now.